Here is how things look to me now, mid-year 2024. So I have three main insights. First, I ask that you to remember a handful of what I regard as timeless truths about our enduring, successful management of your financial plan and wealth. And number two, I have some current observations about investments generally for the first 6 months of 2024. And number three, some insight into what we are doing in our practice to help you progress towards your life goals and your financial plan. So general principles. So we are goal-focused, plan-driven, long-term equity investors. So our main focus is creating financial plans for our clients, reviewing and revising them continually, helping you stay focused, brainstorming creative strategies to help you reach your goals, and tracking your progress. So our portfolios are derived from and driven by your most cherished lifetime financial goals, not from any view of the economy or the markets. We do not believe the economy can be consistently forecast, nor the markets consistently timed. We therefore believe that the most efficient method of capturing the full premium compound return of equities is by remaining fully invested all the time. So we are thus prepared to ride out the equity market's frequent, often significant, but historically always temporary declines. We believe that even during such trying episodes, the power of equity compounding will continue to our long-term benefit. So some current commentary in the market. The first 6 months of 2024 can be simply but accurately summed up with two observations. The bulk of our clients' portfolios are in global and U.S. equities, so we talk quite a bit about the U.S. So number one, the U.S. economy continued to grow, however modestly. Number two, the equity markets responding to accelerating earnings growth did very well. So inflation slowed begrudgingly, providing no urgent prompting to reduce interest rates. So monetary policy remains restrictive, and that is, interest rates are well above the inflation rate, as I believe long-term investors should want them to be. Getting inflation down to the target 2% remains job one. So based on history, inflation is the biggest long-term risk to your retirement, not a market crash. So we believe that we're fully behind this focus on getting interest inflation all the way down to 2.0%. So now, even without stimulating rate cuts, the equity markets advanced solidly across a broad front. The major stock indexes are significantly into new high ground. The impetus for this has been just what it fundamentally ought to be: strengthening earnings. Bloomberg's current estimates are for S&P 500's earnings to be up something like 8.8% this year, and to be followed by a further 13.6% increase in 2025. Earnings are what ultimately drives the long-term value of our core investment asset, which is ownership equity in a broadly diversified portfolio of enduringly successful companies. So stock markets have grown long-term because earnings have grown at a similar rate. So it's not the national debt, it's not looming debt, the looming election, it's not the presence or absence of interest rate cuts, it's not wars, it's not government policies, it's earnings that are the long-term driver of growth. Some general insights into our practice. So it's been a very busy year for us. We have 3 new shareholders in our practice, so we can keep providing the same quality of advice as our practice grows. We continually work to improve our systems and processes. We have broadened our clients' plan reviews to include more detail on mortgages for clients doing the Smith maneuver and similar strategies, more detail on estate planning, and more accuracy on tax tracking to plan future tax refunds for you. We continually think of new ways to use our creative tax and investment strategies. It's a bit of a thrill for us to work out a creative idea that makes a real difference for a client and their financial plan. We have fought CRA processing reviews for a bunch of our clients, many with huge tax refunds. Service at CRA continues to be slow, so this takes quite a bit of time. A few of our clients now have charitable foundations, which are the most effective way to make a real difference in the world. So general insights, I continue to believe that the more we focus on the fundamental strengths of our core asset, equities, and on the importance of your financial plan to your life, the more we're able to tune out the noise and the less danger we will be in of emotional overreaction to gyrations in the stock market. I believe in the financial plans of our clients, the creative strategies many of our clients are doing, and the portfolios we have thanks to our portfolio managers. I want to give a special thank you to our clients. Connecting with you deeply on all aspects of your financial life is very fulfilling for us. It's a privilege to serve you.